Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Tuesday 26th of November. There is a slight sort of consolidation really, nothing really decisive in terms of direction. We continue to see, I think on a broad basis, that the markets are sort of gradually moving towards expectation of a phase one trade deal between the US and China, and you continue to see these sort of drip flow of news surrounding that. A telephone call between the Robert Lighthizer, Steve Mnuchin, and Chinese Vice Premier Liu He has sort of taken place, and sort of again sort of lays the groundwork for that agreement, and they're going to be keeping open channels as well of communication. So it's all sort of feeds into this expectation of positivity. You've seen that S&P 500 closed at all-time highs yesterday, 31.33. Another breakout to all-time highs. Little bit of an unwind tick or two on the S&P 500 futures today, and that has sort of unwound some earlier gains on futures. So that sort of hit European markets a little bit. Not a great deal, that's a slight amount lower. Broadly speaking, there's a bit of a consolidation really across markets. You've got Aussie dollar, which is slightly higher, and that's sort of coming with a very slight sort of consolidation really across the risk moves that we've seen in recent days, but risk appetite broadly speaking has been a little bit more positive in recent days, although you started to see a little bit of a tick lower on the treasury yields, which again is reflective of a slightly less positive market. But generally speaking, I think you can say that with gold, for example, below 1460, it again sort of paints a picture of a more risk positive market, especially considering those equities anyway. And let me just show you the VIX. VIX volatility closed at the lowest level since, I actually have to blow this out to October 2018, since the lowest level since then, so on the close last night. So yeah, it really does suggest that markets are fairly positive at the moment. In terms of data points today, we've got the focus on US really. We start at 130 with the trade balance expected to deteriorate slightly to 70. I think it's 71.5, is it? 71.3 on the deficit, although Reuters don't give the expectation. And then we're looking out for the Case-Shiller home price or house price index improving to 2.1% growth from 2.0 last time out. New home sales improving 1.1% higher to 709,000, and consumer confidence at 3 o'clock will be the key. Consumer confidence is expected to improve to 127 from 125.9. Show you that on the chart, and you can see that that would be maintaining. It's got a very strong correlation to the S&P 500, isn't it? That would maintain the general broad positive outlook for the US consumer still in place. Now that takes me on to my chart today, which is Euro Yen. Now Euro Yen has been an interesting one because it has been trending lower for the past couple of weeks, and I've been talking consistently about 120 big figure as a pivot. Having broken out, it became a basis of support. And is a pivot line, but broken out. It broke below that a couple of weeks ago, reacted higher, but then again closed below that on Friday. And having built this new formation of a downtrend, you can see that confirmed through the RSI, confirmed on the corrective move on the MACD lines. Stochastics also crossing lower and falling away. It suggests that I think that near-term rallies on Euro Yen are a chance to sell. The euro is broadly under pressure, I think, not really doing massively well, certainly against the yen. And cost, obviously you've got euro dollar, which is sort of edging back towards the 110 big figure mark as well. So it's on the brink of sort of turning back lower again. I think this euro yen is seemingly now falling away, finding resistance at lower levels, and testing to the downside. So I think a failure at that downtrend and consistent closing below 120 big figure puts 119.65 initially under pressure, and then 119.25. So those are the two key levels to watch out for. But as I said, look at that RSI. The RSI, if it moves below 40, would be a suggestion that we are increasingly corrective, as would the MACD lines if they went below neutral. And I think it looks like rallies are sort of turning into a chance to sell on euro yen. You've got the failure around the sort of 60 to 65 area before the RSI tends to sort of go back towards the 30 mark. MACD lines sort of struggling to get over 50 on the hourly, over neutral on the hourly as well. So it'd be interesting to see how this resistance comes in at that downtrend once more, which is falling away. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.